Well, thank you everybody for coming today. I'm very excited to be doing this workshop on the truth about impact investing. And it's actually something that's been near and dear to my heart for a very long time. And I thought it was about time to kind of put all those thoughts together in one space where people could just take away what they want to from it at the end of the day. So we're going to cover a lot of different areas today. And this is kind of, I would say, a growing industry. The investment industry has obviously been around for a very long time. Impact investing has been also, but not to the same scale as traditional investment options. So today we're going to explore a little bit of the impact investing and where that sits in the investment continuum, and basically just what that can look like for you going forward as well. So if you want to use the chat to ask questions, that would be a wonderful spot to do it. And there should be times throughout where I may just like check in and see if there's any questions that people have that they need answers to. But let's just launch right in. So a little bit about me. Many of you know me already, so thank you very much for joining today. But for those who don't, I'm a senior investment advisor with Seaglass Wealth Advisory Group, and this is all part of Harbourfront Wealth Management. I am a BC girl. I was born on the North Shore. I did live in Montreal for a very short time when I was small, but I grew up here. I grew up here in the North Shore, and I've lived my goodness, I've lived on the North Shore. I have lived in Vancouver, Maple Ridge, Delta, and Ladner. So I've covered the gamut of different kinds of landscapes across the Lower Mainland. And I have clients in BC and Ontario, but actually also Nova Scotia, which is very fun to go visit, by the way. I did not think this is what I was going to do for a living. I actually wanted to work for the UN or be a diplomat. So I have a political science degree and an English literature degree, just because I love English lit so much, and got a job at Canada Trust as a teller, and I've been in the financial industry ever since. So there you go. Life will do those sorts of things sometimes. And I've been with commercial banking, insurance, TD Securities for a long time, but my passion lies in investments, fixed income, and planning for people. For the most part, it's mostly about the planning. So that's the piece that I love the most. Here, it went forward for just a sec. And the thing that makes me the most excited is actually, I feel very passionate about financial literacy and just giving people information. I think there's a lot of power in having information in your hands. So that is why we're doing this and other series that I have as well. So I'm going to forward the slide, and we're going to talk a little bit about what impact investing is today. So at the very core of it, it's a proactive approach to supporting social good with your money. So like, I think we all care about generating social good in the market or in our communities, but there are things that we can do with our own money that are impactful as well. So it takes kind of understanding where your interest lies, where your passions lie, and then you can actually put your money behind the issues that you care about. So at the very core of it, that's what impact investing is. And it can take on many different forms. And we're going to talk about some of those today, but probably not all of them, because I think that there's so many different ways that you can be an impact investor or support your communities in that way. But let's just get started with it. So I think the question that I get asked most often is, there's all these acronyms, which our financial industry is very well known for. So we've got ESG, which stands for environmental, social, and governance. And we have SRI, which is socially responsible investing. And we've got impact investing. So we're going to talk a little bit about what the difference is between those three different things, those three different elements. So we're going to start with ESG, or environmental, social, and governance. And these are important elements. This isn't really a way of investing, I don't think. Like, ESG is really just a way to analyze. It's a framework that not just advisors or investment fund managers or other kind of endowment fund managers can use. It's basically just a framework to analyze how companies handle and make decisions relating to the environment, social factors, and governance within their own companies. So the things that we kind of ask ourselves when we are advisors considering putting different companies in people's portfolios or in a fund is, how does a company invest to help environmentally? Are they making good decisions as it relates to the environment around them? And if there's a further reach, it doesn't necessarily just have to be within their community. It can be like where they source their paper. Do they have a recycling program? It could be anything, even as minute as that or granular as that. Environmental footprint is one of the elements that we look at to analyze how companies manage themselves. And then we look at the social side of governance. How do they, well, and the employees piece kind of comes in there a little bit too, but how do you govern yourself from a corporate standpoint? Do you have ethical policies? Do you have equitable employment? Do you have diversity within your workforce? All of these elements are kind of important just to see whether those big picture concepts are actually being integrated into the management of these companies. And it even comes all the way down to how do they treat their employees and how are they as an actor within their own communities as well. So it kind of has a lot of reach, but there isn't anything specifically about investing related to these. So when you hear about ESG investments, they're kind of very passive. Like there's nothing really active about ESG. It's more just an analytical tool. It's almost the foundational level of kind of socially responsible or ethical investing, is to kind of understand how companies are operating based on these three factors. So as I say in the slide here, it's not so much exclusionary or inclusionary, it's just a framework to analyze risk. And then you can kind of take it up a step, take it up a notch. And then there's socially responsible investing, or SRI investments. Again, we use so many acronyms in this industry. It's a bit crazy, actually. So this actually is a little bit beyond just the ESG that we just talked about. This is when you now are going to lay over an ethical or a moral lens to the construction of a portfolio. So that could either be a fund manager, somebody who maybe runs a mutual fund, an ethical fund. They're going to look at those ESG guidelines, but then there might be more to it, an ethical or a moral lens to either excluding or including certain kinds of companies. Now, most of the investments that come through are exclusionary. So they're going to take a look at what's going on with, I don't know, they might want to say, I don't want to have weapons within my portfolio, or I don't want to have tobacco companies within my portfolio, or pipelines, or something that has some sort of environmental footprint. You don't want to have it. So that's exclusionary. It's kind of passive. It's just like, yeah, I'm just not going to include those ones because those are things that I don't believe in and I don't want them to be a part of my portfolio. So that's the exclusionary ones. You can actually have some SRI or ethical investments that say, okay, I'm going to focus on companies that maybe do renewable energy. Or so I wouldn't say they're super active. It's just what they include or don't include. So it's not like they're talking to the companies themselves. It's more just looking at what these companies do and understanding that they get good scores, because believe it or not, there are scorecards. There's report cards as it relates to the ESG side of things. So it's more like a giant filter. That's how I think of these kinds of portfolio management styles. So you get this big ESG filter, and it probably funnels out a whole bunch of other things that you don't want to have in there, ones that don't have good ESG scores. And then you take it down a notch and get a little bit more focused. And now you're going to put an ethical or moral lens on it. And then that will also filter out a bunch of things that you don't want to have within the investment. And then some, but not all, will take whatever's left and say, okay, and I want to focus in on certain parts of the environment or some kind of social structure, which we'll actually talk about a little bit later, the ones that get and now we're getting we're really starting to approach impact investing. As soon as it gets a little more active, in its style, that's when we get closer to an impact investing kind of structure. So impact investing, they're often connected at a grassroots level. So there's actually a slide in here that has tons of examples. A lot of them are BC focused, of different kinds of kind of grassroots organizations that are considered impact investments. And the funding from those comes from a lot of different sources, which we're going to talk about a little bit. But a lot of them are accessible just to everyday investors like you and I. Not everything is, and we're going to talk a little bit about that too. But there are a lot of things that actually are available to just the average Joe when it comes to investing. So the idea, though, is that you basically get to put your money where your mouth is. Like if you feel strongly about supporting certain issues, businesses, social structures. So to give some examples of what that might look like, there's a lot of First Nations projects that can be supported. There are ones that are, say, women-focused entrepreneur projects that can be focused. You can get quite granular with what you want to put your money behind. And the idea is, if it's a business, it gives you an opportunity to put your money to support those businesses, to give them an opportunity to just grow and thrive in their own communities. It can also be like, we can also just put our money where our mouth is by buying local and like going to the local coffee shop instead of maybe a big name chain and those sorts of things. Like we can put our money behind our feelings and our sentiments and our passions every day with the decisions that we make with our money, but we can also do it with our investments. And we also care what those organizations or those businesses do with our money. That is another big, like how it gets used, not just that it's for a certain focus or group that maybe needs a little bit of a lift. It's also just that we get here, just a second. There we are. I know there's a question in the chat and we will absolutely get to that as well. I may even answer your questions further on in this presentation, but let's just start with where impact investing fits within the investing continuum. So there's all sorts of different ways that you can invest in things. And this was handy. So Thrive Impact Fund is one of the options for impact investing. And they had this awesome continuum that I actually think really describes everything nicely as it relates to where it all fits in within the kind of greater umbrella of investing. So when you think about traditional investing, so that's just kind of the everyday mutual funds, stock portfolios that are generally in, I would say they're probably in, oh gosh, like 85 to 90% of portfolios I would describe as traditional investing. And that could be anything. So you could have anything in there, and they may not even use the ESG or SRI filters in order for those decisions to be made. And then you kind of take it up a notch to responsible investing or ethical investing. And that's when you're looking at those ESG risks. And you're integrating that into the analysis behind what you're deciding to put in a portfolio or not. Then you kick it up a notch. We already talked about SRI. So now we've got negative and positive screening of these risks, but also overlaying that ethical or moral guideline to the investing in the first place. And I would say that most folks who have an interest and most things that are accessible to retail-sized investors definitely fit within the socially responsible investing. There's lots of choices as it relates to socially responsible investing. Impact investing kicks it up a notch. So impact investing is a much more active approach. So instead of just kind of negatively filtering out the stuff that you don't want, and maybe even focusing on some sectors that you do want, which I would categorize as socially responsible investing, impact investing is a little different. So there are some, and there's going to be a page where it just gives a whole bunch of different companies that do all these different things and organizations, but you can focus in on one specific area. So maybe there's a sector you really want to support. Maybe it's renewable energy. And I think, or maybe it's some kind of social desire to do like micro lending within a community and support businesses for people who maybe haven't had the easiest start. or creating opportunities for folks. So that's a much more proactive. And when it comes to socially responsible investing, I would say there's kind of even a hybrid between these, like as it starts to launch into impact investing, where you can get fund managers or portfolio managers that are going to actually go to the AGMs and challenge the senior executive team on some of the issues that people care about. So sustainability or governance or kind of their social policies and that sort of thing. So that's a little bit more active. And as soon as you get into something that's more active, where people are going to actually take an approach to go and talk to the senior executive team, even just meetings in their offices, and ask how they're furthering and furthering themselves down that line by strengthening their governance and their social governance and their environmental footprint, obviously reducing that. So that is now verging into impact investing, because now not only are you just avoiding the stuff you don't want or investing in sectors passively that you're interested in, but there's some sort of active approach happening to kind of better and improve the communities around us for whatever the main reasons are that you're passionate about. So now we're verging into, or we're leaning into impact investing at that particular state. I think the main area that most of us can access is this impact first, what Thrive calls impact first. So focusing on one or more areas to achieve social or environmental change and still generating reasonable financial returns. And we're going to talk a little bit about myth busting. I think that there's a big thought out there that you're not going to make money if you're going to do impact investing. And that's not true. I think your choices just have to be reflective of those expectations. And there are investments that are out there that are impact investments that are existing to generate reasonable returns for investors as well. And then you can kick it up even further to community investing. And this is what Thrive focuses on. They do a lot of this kind of work, where it's actually more about, I want my money to create social impact. I might not get as high returns as the market would have, but I'm doing that by design. I am purposely investing in the community that around me, the causes I care about, and I know I'm going to take now a little bit less of a return. Where I want to focus is this column right here, where you actually can generate reasonable financial returns and still support all the things that you actually care about. And I would say that there's even one more square beyond this that we can't even see, that's just about being philanthropic. So I think that a lot of folks who are socially conscious and want to be ethical with their investments and with their funds are generous. And we make a lot of donations. And I think that you can also, like, that's an investment as well. You expect no return other than you get, CRA helps you out a little bit because you get a tax receipt for your contribution. But that's an important element to work into a financial plan as well. That whole philanthropic piece is really quite important. And I would say that's the one at the end. So you're not investing or donating because you expect some kind of financial return to whom you're giving the donation. But there are still some financial elements that can come back to you just through kind of your tax return and getting a charitable donation receipt and that sort of thing as well. That's not what we're talking about today, but I think it's important to include that in the continuum, because there's a lot of groups that really rely heavily on a blend of different sources of funding. Okay, so I'm going to kind of take it to the next slide here. There we go. So types of impact investments that are out there. And this is kind of what I was, and I haven't even put donations or people who are giving donations on here, but there are lots of different ways that you can be an investor. And I would describe most of us as retail investors. So I know I'm starting at the bottom of the list and working my way up, but retail investors, you can usually access those kinds of investments, usually with $500 or maybe $1,000. You can actually start to support some of the causes that you care about as a retail investor. Accredited investors kind of takes it up a notch, and you can do a lot of different kind of cool things once you're an accredited investor. but you have to have pretty significant assets at that stage of the game, or a pretty high income to be considered an accredited investor. And then you get foundations and endowments. And I might even throw government in there to a certain extent, because I think there's some groups that can get funding from various government policies or sources of income that come in through the government that just kind of flow through and get passed through to their organization to do good work. But so the foundations and endowments, those tend to be the donations or the philanthropic contributions. And then you get institutional investors, and that is exactly what it sounds like. It's big firms, it's big companies, it's banks. They need to invest too. They've got cash values as well that sit on their books that they need to do things with, and often they want to do good things with it. So that's where the institutional investors can come into play. So I would say those are the biggest types of impact investors, but retail is really what I wanted to talk about today, just because I think that that makes it accessible to just about anybody who is saving and has money to save. I am going to talk a little bit about some myth busting. So people think that maybe there's more risk in some of these investments than there are in traditional investments. And I would argue that you just need to do your due diligence like you do when you're making any investment decision. And I actually would also argue that companies that have good governance and good policies and make good decisions when it comes to their people and their community and the environment have actually mitigated a lot of the risk they have with their companies as they run them. So I think companies that don't have that governance and don't have those good policies can sometimes trip up and make poor decisions, which is not good for their shareholders or their investors. So in some ways, I think you could actually argue the opposite, that companies that have really good governance are mitigating their risk at the end of the day, because there's a bit of a safety net when they're making good decisions that lower the risk over time. So I think that that's a myth that's actually quite easy to bust. I think that there are some investments, again, when we were talking about that continuum earlier, when you're moving up to the end of the continuum and it's more about social impact and less about financial return, some of those ones might have a little bit more risk, but you know that going in, and that you're making it for other decisions. You're not necessarily making those decisions to make a lot of money. You're doing it because you want to make a big impact in your environment or in your community. So, but I would say overall that companies that make good decisions as it relates to all of these kind of ethical guidelines and good governance are actually mitigating their risk in the long term. So that's one of the myths that I wanted to bust today, because it's something that comes up all the time in conversations with folks. And the other one is that you can't actually make any money doing impact investing. And you know, with a lot of impact investing, the investor still gets paid a return on their investment. And the businesses that they're investing in do quite well because they're well supported. A lot of them have really good programs around them too to help them be successful. I'm talking about now maybe some of the smaller scale community focused groups that are in there. So I don't think that any investment that's an impact investment is necessarily more risky or that you're not going to make money at it. I think you have to apply the same general guidelines that you would anytime you're making an investment decision. Like, what is your comfort with risk? You need to be honest with yourself about what would cause you to lose sleep at night or not cause or allow you to sleep soundly, right? I think that that's important. How do you react when you see what's going on in the markets? Like, what is your natural tendency in terms of how you're going to react to news and market movement? How long do you have to invest? If you only have a year or two, if there's something that happens as a correction, and most of these investments are all going to go up and down as just part of an economic cycle. If you don't have a very long timeline, I would say that that should reduce your risk significantly, because you don't necessarily have the time for that market to recover or the economy to recover again. And your experience with investing should also determine it. Like, if you're just getting started, it's really important to make sure that you really understand what it is that you're investing in. And some of that is just, if you're going to do it yourself, it's a whole lot of research, or get guidance. Like if you're really new at this and you're just not sure where to go or what to do, get help in making those decisions. Because I think that, yes, you can make money. Yes, you can have lower risk or the same amount of risk as other investments would have, but you just have to go in with your eyes wide open and really understand what all the parameters are for certain investments. And some of them actually have a lockup period as well. So it's really important to understand your liquidity needs as well. Are you going to need to pull money out for any reason, whether it's an emergency or a planned thing? Maybe you're going to need a down payment for a home or something like that. If that's the case, you really need to pay attention to the liquidity aspect of the investment. So I think there's so many different elements that come into play. And those are actually the same whether you're doing traditional investing or whether you're doing impact investing. So you definitely want to have all of those parameters kind of considered, and then you can filter out some of the things that you don't want. If you want to be more proactive with your funds, then you just look at that kind of narrowed down list of impact investments that you can put in your portfolio. And it's okay to have some element of some risk in your portfolio as well. You don't have to put all of it into one thing. In fact, you shouldn't. That's not ideal. You want to have multiple investments within a portfolio anyhow. So if one of them tends to carry a little bit more risk, but you feel very strongly about it, then maybe you only put 5% or 10% of your money away into something like that. And then the rest might have just a lower risk associated with it, or lower volatility, lower up and down movement in the markets. So I hope that kind of makes sense. There are no inherent higher or lower risks or ways to make more or less money. It's just really understanding what you're putting your money into, I think is the main characteristic of impact investing. We have no shortage of choices when it comes to impact investing. And a lot of these are, I mean, we're based here in BC, so I've used a lot of BC-based organizations in this. There's a lot of fantastic ways that we can access different kinds of investments. And some of them are very different. And you're going to notice some pretty traditional names in the mix too here, like Desjardins, AGF, Mackenzie, BMO, Vancity. There's a lot of big banking institutions, but they might have very specialized folks that they have on their payroll that really focus in on this. And they might have one or two selections that would be categorized as impact investing. And then there's a lot of really community focused groups in here too. And this by no means is an extensive list. This is just a few examples of some of the organizations that are here in BC and beyond that we can take a look at to see whether it fits within people's parameters for what they're looking for the investments that they have. And some of them are funded by investors. Some of them are actually funded by the government in some way. So, or a blend. There's a lot that actually have a blend of both kind of government, corporate, and investor sponsorship. So I think that that's kind of a fascinating, I think that partnership is necessary to bring a lot of this forward. So I did want to share that, and I saw that it shot past the screen a little bit earlier, so I did want to bring that up. I'm just going to take a quick look at the chat, because I know Arv had mentioned, how would you rate the investment risk of these versus those that might be more global? Is the due diligence the same or greater or less? So that kind of speaks to what we were just chatting about. I think it is important to have a global element within a portfolio. Like, you need to be diverse within the kinds of investments that you hold in your portfolio, like the actual investments themselves, between bonds and stocks and things that earn dividends and things that are focused on growth. But geography is important too. Like, you don't want to have every single thing invested necessarily in Canada. And these would mostly be, but there's actually a lot of options that are out there, not as many as I would like to see, but still quite a few that have a global focus. So you can do these exact same kinds of filtering and have a global focus, and global companies that are there, but they're issued by Canadian companies, but they actually are investing globally. So I think you can actually have a global impact investing portfolio. And then you can have elements right from grassroots, community, all the way through to including the whole globe, which I think is a handy thing. So that's a good question. Thank you, Arb. I see there's another thing in the, a thumbs up. Yay. Thanks. Yeah, so that was a good question. And I think it kind of speaks to, you have to do your due diligence across a lot of these different factors. But whether it's community focused or all the way to global, I think you do diversify yourself a little bit more. The global ones tend to be big and not community focused, whereas the more local ones can get really granular with community, which is kind of exciting too for an element of a portfolio. So let me just move this forward again. As investors, how do we make sure that we're socially responsible and ethical with our investments? And I think that this is already a good start. I actually think knowledge is power. So learning about what's available out there and what you think might mean the most to you that's the way to start. That's the way to make sure that we're being socially responsible and ethical with our investments. And if there are things that you absolutely do not want to support with your money, then it's very important that you make sure that those elements are within or not factored within any investment portfolios that you have. And we have ways as advisors to find out what the holdings are. Even sometimes you don't even know. You can just invest in a mutual fund and you don't even know what the companies are that are inside it. Well, we can get that information in a much more detailed way. And if there are companies in there that you just absolutely don't want to support with your own money, then you need to make different choices. And that's how we can be socially responsible and ethical with our investments. I think it's just going in with a sense of purpose too, right? Like that's an important element. So I think there's a lot of options in the marketplace, but I actually don't think there's enough impact investments in the marketplace. And I think that they're growing. Like even over the last 2 years, 3 years, I've seen so many more than we had before. And I think that's just an element of demand. So there's a lot of work that goes into it, more than just kind of a regular traditional kind of investment. There's a lot more hands-on interaction between portfolio manager teams and like C-suite executives, like different kind of research, much more detailed on specific things that traditional investments may not actually focus on. Because those commitments are extensive, it costs a little more for companies, I think, for big companies to have a team that might focus on this. But I think that they benefit because there's so many of us who want to actually support those causes that they're actually benefiting just because they're gathering so many assets. And it doesn't mean you pay more as an investor for those specific funds, because they get paid by having more assets under management. So I think it's a good situation, but we need more companies to do it. And not necessarily, it doesn't have to all be the big companies. I think that it's great that there's a blend of everything from grassroots all the way up to big multinational kind of fund managing companies that have these kinds of investments, but there's not enough. And I actually think that it's up to us to demand that there's more. You got to make that's how you make your money talk, by asking for more, looking for more solutions. And what I love on the grassroots level is there's so many organizations that are coming up with really creative ways, again, to partner government, corporate, and investor money to kind of answer a lot of social challenging solutions or situations, to get solutions for those challenging situations in various communities and social structures. Anyway, I think that that's the most fascinating aspect, is watching it all, seeing this all happen, but we can actually not just sit on the sidelines, we can actively demand it. And our money talks as well. So I think the power of everybody's money, all grouped together, collective capital, we can do a lot. Like money does still talk. So, and what we decide to do with it, if we're good stewards with our money, not only do our communities and does the earth kind of benefit from it, but I think over time we'll have more options as well available to us. So, and more companies are caring a lot more about that whole ESG governance, like those guidelines. That's happening more. We get a scorecard now. It's interesting. I'm not going to share it because it's a very busy screen, but as advisors, we have this very busy screen that tells us exactly what companies are trading at, what their dividends are. And there's actually letter grade scorecards now for ESG scoring, like A's, A pluses, B's, D's, F's. So like, do you think we're going to invest in any of the F's? No, I wouldn't, because the risk inherent in those is huge. So I think that that's kind of fascinating. And the more that comes to the forefront, I think the better investors are equipped to make decisions as to what they do with their money. So that's kind of a interesting aspect, but I think it's up to us to demand more. So where do you start? Well, this is a good start. Like, the road to impact investing starts with education. And there's help. There's help out there to guide you along the way. And I know not all advisors are necessarily focused on building kind of ethical impact investing portfolios, but there's a lot of us that are. And I think that there's a few steps that you can take to start that journey. And that's what I kind of wanted to talk about right now. So the first thing I'm going to do is actually, and you don't have to like share or anything like that, but I want you to think about what your personal money story is. And this is a question I ask my clients. And in and of itself, people are like, I have no idea what you're talking about, lady. What the heck is a personal money story anyways? And really what that is our ideas and concepts about how we think about money were really formed back when we were kids. So in our household, we didn't actually talk about money all that much. Like, it was not something that we would sit down as a family and talk about. The only things I ever heard, and keep in mind, I grew up in the 80s when mortgage rates were like 21%, was, oh my God, we're going to lose the house. We're going to have to move to Calgary. All these sorts of things were, not that there's anything wrong with Calgary, but at the time, that's not where I lived or went to school. And so it was a lot of stress around money in my house. And we didn't really talk about what to do when you got your allowance for doing all your chores. So if you went and spent it all on candy at the corner store, then that's what you did, and you had none left. And those weren't great decisions. So I think that the personal money story is like, where does it start with you? What were the feelings that you had around money as you were growing up? And then as you started to approach adulthood, how did that work as well? When you had your first job, what happened with your paychecks then? How did you handle them? Did you spend them all? Did you save it all? And what were the reasons as to why you took whatever actions that you did? I think it's really important to kind of figure that out, because it actually carries with you throughout your life. You can make all sorts of decisions. If you don't have a confidence about money, then maybe you don't ask for the raise when you should ask for a raise with your employer. Or if you're business for self, maybe you give up too much in your contracts when you're negotiating. Maybe you don't have a confidence about it. Or maybe you do, and that's a wonderful thing too. So I think really understanding what your personal money story is will give you a lot of context around some of the decisions that you want to make. And when it comes to impact investing, I think that's also really important. So just really understanding what that personal money story is kind of a key element to being successful. And the other element of it is building a purpose-driven life. So, and I know that sounds huge and kind of strong, but I think it's really understanding of like, what is it that you love to do for work? Like, what is that vision, and what is the impact you would like to have on the world? So, and I don't know that we think this big picture often. Well, there's laughter. That's awesome. But that's a big piece. So I think what it comes down to is a life built when you have purpose, you're basing it on values, and suddenly, or sometimes, we don't know what those values are because we haven't defined them. And this isn't like a spiritual or a religious thing necessarily. I'm going to share with you mine just so that you can see what they are. But I think that core values will help you because you have decision-making touch points. So when you're deciding whether to take a job and maybe it's out of town, does it actually connect, or is it going to work in conflict with some of the core values that you have? When it comes to making investment decisions, the same should be true. So this is why I think it's important to even take this step back before you build an impact investment portfolio. So these are my core values. These aren't everybody's core values. These are the things that I hold to be true, to know that I need to be happy. So family is important, and I need to be available for both my parents who are getting a little older. And I mean, they don't really need me now, but the time might come when they do. But I want to be available if anything like that happens. And then kids as well, like that whole element is really important for me. So whatever decisions I make, that has to be a part of it. That might not have to do with my investing, other than maybe how much I put towards family, because they're expensive, and how much I put towards investments. But autonomy, really important. I've discovered over the years that I like to have freedom to make my own decisions. So autonomy is an important one for me. I care a lot about community. I volunteer an awful lot with a lot of different organizations, and like that is my happy place. That is how I refuel. So that's an important element as well. Knowledge, I love learning. I'm always learning. I'm always taking, I mean, I have to for my job, but even beyond that, like I need to have those learning opportunities. And I do have a sense of adventure. I do like to travel. I do like to get out in the outdoors. So these are the things that are important, and not every one of those core values comes into play every time I make an important decision. But the ones that do, I need to make sure that they're going to work together and not in conflict of that. And that's important for your investment portfolio too. So some of these may not be, but some of these elements are going to be a key factor in the decisions that you make for that. So get help. If you don't know what yours are, you can be guided through it. That's one of the processes that we do with our clients. Before we even talk about investments, we talk about all this stuff, because I don't know even how you can build an investment portfolio if you don't know this about a person. So, but these are some of the questions or the steps that are good to take to kind of figure this stuff out. So what do you want your legacy to be? Basically, how do you want to be remembered? Although that sounds a little dire and sad, but your legacy can also be while you're still living. So let me put that in there too. But what do you want when people think of you? What do you want them to think about? I guess that's an easy way to kind of determine what your legacy might be. Recognizing what those core values are and figuring out how to integrate them into your plan, and not just your investment plan, your life plan, your decisions that you're going to make in life about where you live and who you live with and what job you're going to have. And all of those elements I think are really important. That'll help you figure out what that vision is for your life. And that changes all the time. Like that's not something that's just a one and done. Your vision for life is going to change all the way through your life. Once you've sorted that out, then it gets quite tangible. And it's all about just setting short and long-term goals, figuring out what the price tag is associated with some of those goals. And that's again where we can help work it backwards and figure out what you actually need to do to set money aside to achieve some of those goals. Even if it's like a negative income goal, I'm going to take 3 months off work and I'm going to go travel. Well, we still have to plan for that, because you've got to figure out how to cover your expenses for those 3 months. So it's not always about spending. Sometimes it's about not earning. And then it's about the action. Like, great, you've thought about all these things, but now what are you going to do? So we better figure out what the action step is, and then you map it out. It's like a big road map. And sometimes you take detours, and sometimes roads are closed and you have to take a detour. So figuring out how to be nimble enough with your own map for those next steps. And I think accountability and support is important too. And that can come from your family, from your friends, but it should also come, as it relates to this stuff, from your advisor. So that's the other piece that kind of comes into play when it comes to the whole impact investing. So really, this is just a contact page. It's just saying, like, get that support, and we're here to help you if you don't have anybody who would give you that support in the first place. So I've stopped sharing my screen just because I can give that information to you after the fact. But I just wanted to see if there's no other questions in the chat, but there's not a ton of folks on the call either. So if you do want to unmute yourself, we could just ask questions that way too. We've got about 8 more minutes before the end of the presentation, and I wanted to leave a little bit of time for questions. So if you're more comfortable doing it in the chat, that's cool if you have any questions. And if you would prefer to just unmute yourself and ask. Jen.
Yeah, I've got a question. So I have some, I guess just to make my question more general, if you have any kind of investment with government matching, which I know they do for a lot of like children's education and stuff,
yes.
Do you get any control in those funds where the government is matching your contributions?
Are you thinking about like RESPs, the registered education savings plans?
Yeah.
Yes. So you do with those. The ones that you have a little less control over, I'll talk about first. Those are maybe through employment plans where you have group RSPs.
Right.
And they're probably going to have a menu of choices that you have. And some of them, most of them, in fact, don't necessarily have impact investing options in them. But we definitely have all the freedom in the world as it relates to registered education savings plans, because you get to invest your money how you want. It just has to be eligible, but most of these investments are eligible for these registered accounts. And then when the government gives you the grant, then we have that in cash and we can then turn around and invest that as well. So absolutely, yes. In those RESPs, you absolutely can. Does that answer your question?
Yeah, definitely. Because I wasn't sure if the government if it went into the same pot, but it sounds like it does.
It does. It goes into the same account, but it shows up as a separate cash inflow into the account. So when that shows up, you can either add it to what you're already doing if it's what you like, or if you wanted to like branch out and do something different, you can do that too. So you get a lot of flexibility with that. I think it depends where your RESP, I'm going to call it by its acronym, where your education plan, where you hold it. Not all places are going to have all options available. Like some places are only going to have maybe their own funds, like a bank or a credit union might just have their own, but there are options out there for everybody who has an RESP to expand out if they want to.
And it sounds like a great first step is asking those questions.
Yes.
Like taking time to go in and then ask. And same as you said, there's less options with maybe a corporate matching situation.
Yeah.
But they will never change if you don't ask the questions.
Yeah, so absolutely. And if there's enough employees.
Exactly.
Oh, go ahead. Yeah.
Yeah.
That's how you can demand change, right? So if say Sun Life holds your group RSP, then we need to go to Sun Life and say, hey, we need some options that relate to this. And then there's more flow of funds into these sorts of things that do good in our world. So, and some of them have it. So I don't want to say that none of them do, but your employer decides who has your group benefits and who has your group RSPs. We don't get to make that choice as an employee. But if it's not there, then I agree. Ask for it.
Yeah. Different kind of impact.
Yeah, exactly. Well, and it's going to take this demand in order to expand our options. Like, I think that's what it comes down to at the end. Already, the reason why we have more is because there's more people wanting these places for their money to do certain things in the world or in their community. So these things exist, these opportunities exist because people in the past had demanded for those opportunities to exist. So I think that we're in a good position to ask for more. And I would definitely, because there's a lot of money that accumulates in those group plans through workplaces as well. So, and we'll ask, we often ask when we're dealing with insurance companies on behalf of companies or employers or employees as well, we'll ask on behalf of our investor clients as well. So, but it takes us all doing it. Stephen, I see you unmuted yourself. Did you have a question? Maybe you didn't. Does anybody else have a question or one in the chat? Oh, there you go. Stephen's muted himself again. He did not have a question, but it's all good. So what we'll do is I think I'll end the presentation now, just because I think we've had a very one-sided but good discussion on kind of the truth about impact investing. And if anyone has a question, I think I emailed almost everybody this morning with the Zoom link. So you have my email address. If you have one that's maybe a little more personal, because you know what, this stuff tends to be a little more personal. So I totally get it. If you don't want to ask a public question, please reach out to me. I would absolutely love to talk about this with you as it relates to what your question is and get you the answers that you need. So please feel free to reach out for sure. And I know a few of you too are actually from some of the organizations that may have even been on that list a little earlier, because I'm looking at some of your names on the Zoom, and that's kind of exciting. So I'd love to make contact with you too. So thank you very much for coming today. I do appreciate all your time.
Thank you, Tracy.
Thank you.
Thank you.